Ever thought about investing in fine art, but don't have millions to drop on a Picasso? Well, that's where Masterworks comes in. It's a platform that lets everyday investors like you and me invest in shares of multi-million dollar art offerings without having to store, without having to insure or auction off those paintings and sculptures ourselves. But is it actually worth it? Masterworks uses data-driven algorithms to pick artists with strong appreciation potential long-term, giving investors a hands-off way to enter the art market. And while returns have been impressive, this isn't a risk-free investment. In this video, I'll break down how Masterworks works, the potential risks and rewards, and whether it deserves a spot in your portfolio. We'll also talk about the fees, safety and security, customer support, pros and cons, and whether Masterworks is right for you. So if you're curious about alternative investments and whether fine art belongs as a slice of your financial strategy, stick around. I've got all the details coming up next. Hi, I'm Sean with The Modest Wallet, where we want you to be modest with your wallet, but ambitious with your goals. We're here to talk about and review the art investing platform Masterworks, the sponsor of today's video. So, how does it work? Traditionally, investing in high-value art was only an option for the ultra-wealthy, sometimes requiring millions of dollars to purchase a single piece. Masterworks, a fintech platform, is changing that by allowing everyday investors to invest in shares of valuable paintings with qualified investors. This fractional investing model makes the art market more accessible, giving investors a new way to diversify their alternative asset portfolios. How Masterworks works is they have to acquire art. Masterworks selects and agrees to purchase blue chip contemporary artwork from renowned artists like Picasso, Warhol, Banksy, and Basquiat. I hope I pronounced that right. The company uses proprietary data to identify artists' markets with strong long-term appreciation potential, targeting the high-end segment of the market with documented momentum or historical growth. Fractional investment. After the painting is acquired, Masterworks includes it in an offering it registers with the SEC, the Securities and Exchange Commission, and issues shares in the artwork offering, similar to how companies go public on the stock market. Investors can then invest in shares of a piece of that art offering, effectively owning a fraction of it without needing millions of dollars. Holding an appreciation. Masterworks aims to hold onto an artwork for 3 to 10 years, during which time they believe the artwork's value may appreciate. Investors benefit from any price increases when the painting is eventually sold. Secondary market trading. For added flexibility, Masterworks offers access to an unaffiliated secondary market where investors can buy and sell shares before the artwork is sold. While liquidity is not guaranteed, it offers an outlet for selling so investors aren't locked in for the full holding period. Now, I wasn't going to get into the costs or the fees yet, but if I'm going to talk about returns, I do need to mention how Masterworks makes money from its investors as well. So when it comes to the returns and fees, when a painting is sold, investors receive their proportional share of the profits. With that said, Masterworks charges a 1.5% annual management fee, 10% expense allocation, plus a 20% share of any profits, similar to how hedge funds work. In 2024, Masterworks sold a Basquiat painting for $8 million after holding it for 1,398 days. After deducting fees, investors who put in $10,000 made over $2,600 in profit. Masterworks handles the entire process from sourcing and purchasing the artwork to storing it, waiting for the right buyer, and finalizing the sale. So investors don't have to do any of the work. However, returns can take time, and Masterworks emphasizes that investing in art is a long-term commitment. One more thing when it comes to costs, there is a 10% expense allocation fee from Masterworks, which is an upfront fee that covers various costs associated with acquiring, securitizing, and maintaining the artwork. The fee is taken out when the artwork is first offered as an investment, meaning it is deducted from the total capital raised before shares are distributed. Essentially, if an artwork is acquired for $5 million and Masterworks raises $5.5 million from investors, the extra $500,000, that 10% of the offering, is used for administrative costs, storage, insurance, and other operational expenses. This helps Masterworks manage and hold the painting until it's sold. Investors do not need to pay this fee directly. It is built into the offering size of the shares. Masterworks has completed 23 exits of their 450 plus offerings to date, Check out the full history of the sales and their returns on the screen. And as I take a look at this, I would say these are pretty impressive overall returns on investments. Why investors use Masterworks? Masterworks provides a way to invest in fine art without needing extensive knowledge of the art market or a massive budget. Contemporary art prices have historically outpaced the S&P 500 over the past 30-year period from 1995 to 2024, making it an attractive alternative investment. However, like all investments, there are risks. Art prices can fluctuate, and past performance doesn't guarantee future success. For those looking to diversify beyond stocks and real estate, Masterworks offers an innovative way to invest in a tangible, appreciating asset with a lower barrier to entry. And speaking of that, what is the process to get signed up with Masterworks? This is an area that might surprise you. Getting started with Masterworks takes a few extra steps compared to other investment platforms that we've reviewed. To begin, you must request an invitation by providing your email and answering a few questions about your investment portfolio, such as the amount of liquid assets you have, how much you're willing to invest in blue chip art, and your investment timeline. After submitting this information, you'll schedule a call with a representative from their Masterworks advisors team who will see if art investing is a fit for you and then guide you through the art investing process. Once you've been approved following that dialogue with Masterworks advisors, you can continue investing independently through the online platform. Investment minimums and considerations. Masterworks has some income and asset requirements for investors. While individual artwork listings may show a $15,000 investment minimum for first-time investors, we've heard this may be adjusted on a case-by-case basis. Generally, Masterworks suggests allocating a slice of total assets to art and diversifying across multiple pieces. Like any alternative investment, Masterworks carries more risk than traditional options. While many of the artists they focus on have shown strong historical appreciation, returns are not guaranteed, and investing in fine art requires a higher risk tolerance. Additionally, self-serve investors must choose which pieces to invest in, so some knowledge of the art market or a willingness to learn is beneficial. For those seeking guidance, Masterworks provides access to get started or restarted with their affiliate Masterworks advisors to help match investments with individual risk preference. As with any investment, it's crucial to do your own research and ensure it aligns with your financial goals before you're going to go ahead and dive in. Safety and security. As a goal, Masterworks prioritizes the protection of users' personal information and investor data. Every piece of artwork offered by Masterworks is filed with the SEC, and these filings are available for review on the company's website. However, it's important to note that while the individual artworks are SEC registered, Masterworks itself is not a registered or licensed investment platform with the SEC. Also, neither the SEC nor any state securities commission or a regulatory authority approved, pass upon, or endorse the merits of any investment in their filings. To ensure the safety and preservation of its artwork, Masterworks stores its prices in high security climate controlled facilities such as the Delaware, Freeport, and the UOVO facilities, which are fireproof, waterproof, and designed for optimal artwork storage. Customer service. Now, in regards to customer service, we found that you can contact them by going to the bottom of their website and clicking Contact Us, which leads you to a screen where you can put in all your information and your specific question to be answered by a customer experience representative at their earliest convenience. If you need direct, immediate help, Masterworks has a phone number you can call, 203-518-5172. I should mention that you can have many of your general questions answered in a very organized, knowledge-based section of their website. Plenty of frequently asked questions that you can search for any information. It's very nice, I would say. All right, we have covered a ton about Masterworks. Let's start to wrap this review up by taking a look at some of the pros and the cons of the platform. The first pro is you can invest in offerings featuring high-end art pieces, which historically has been an impossible sector to be in. The second pro is the impressive historical performance with annualized net returns like 17.6%, 17.8%, and 21.5% on 3 of their works. Note that those were held for over a year and don't include those that have not yet sold. The third pro is the access to thorough market research and vetted artwork for informed investing. The fourth pro is Masterworks manages the entire process from acquisition and valuation to secure storage and sale of art pieces. When it comes to the cons, and this first one, I go back and forth because it could be seen as a good thing, ensuring serious investors. So the requirement of the phone interview to begin investing and having a $15,000 minimum investment threshold for first-time investors makes it difficult to get started. Second, the fee structure can be a little confusing and higher than other alternative investments. And third, Masterworks investments require a multi-year commitment with limited liquidity options. Masterworks has received 4.3 stars on Google customer reviews and is a great option for investors looking to diversify a portion of their overall portfolios with alternative assets, or for art enthusiasts who want exposure to high value artists without the upfront costs, maintenance, and complexities of buying and selling on their own. With that said, it requires a minimum initial investment of $15,000 for first-time investors, which may be waived. And since these investments are not highly liquid, it is best suited for long-term investors who don't need quick access to their funds. Like any alternative investment, Masterworks carries more risk than traditional options. While many of the artists they focus on have shown some strong historical appreciation, returns are not guaranteed, and investing in fine art requires a higher risk tolerance. Additionally, self-serve investors must choose which pieces to invest in, so some knowledge of the art market or a willingness to learn is beneficial. For those seeking guidance, Masterworks provides access to their affiliate Masterworks advisors to help match investments with individual risk preferences. As with any investment, it is crucial to do your own research and ensure it aligns with your financial goals before diving in. If you found this video helpful, make sure to subscribe to The Modest Wallet for more honest reviews and insights into the latest finance and investing apps. Thank you so much for watching, and I will see you in the next video.